Welcome back to Block TV, and now time for Long Read Sundays. Every Sunday, the crypto community receives a treat in the form of a well-researched and thought-out Twitter thread by one of the top writers documenting the ecosystem. I'm talking, of course, about Nathaniel Whitmore and his Long Read Sunday Twitter column. Nathaniel is joining us again this week to take us through some of the top highlights that he's curated from his column. Nathaniel, thanks so much for joining us.
Hey, how you doing?
Very good. But before we get into your top 5 for this week, of course, bit of breaking news, as it were, that's rocking the sphere. That is, of course, the announcement by Binance of their Venus project, an ambitious open platform project bringing fiat currencies into the digital ecosystem from around the world. Some are calling this a challenger to Libra, others saying it goes even beyond that. Nathaniel, what are your thoughts?
Yeah, this is one of those weeks where by the time we're here on Monday, Long Read Sunday is already so far in the rear view because of new news. So I think headlined obviously by this one. So it's really interesting. So we don't have that much information. The announcement was made released in Chinese only first, and then started to kind of leak into the English-speaking press. And what it looks like is a regionalized stablecoin project. So basically, a version of Libra, but maybe pegged to local currencies, but on a stablecoin version. And so the thing that's interesting about this is that it's a bet in some ways that the idea of a digital cryptocurrency as a replacement for kind of fiat money is inevitable, right? That the convenience is too much, the ease of use is too much, and that it's going to happen. But what Binance seems to be betting on with Venus is the idea that rather than kind of a transnational global currency like Libra, maybe people are going to be more interested in regional currencies that are pegged to either their local kind of national fiat currency or more maybe a regional basket. So I think that it's classic Binance too, in the sense that it's also I think a bit of probably a regulatory arbitrage play, where it's likely that they go after areas and regions first where it's going to be harder for Libra because of kind of existing political will, but perhaps they're interested in the technology and the idea and would like a partner like Binance. So I mean, on first glance, it's another brilliant move, and frankly is going to create a huge competitive force in this market, and if anything, accelerate the kind of fiat pegged global stablecoin wars to a whole nother level.
Certainly, I mean, it seems an interesting approach in the sense that I would say Libra looks like a top-down project, working with the major global currencies, building a cryptocurrency layer over the top of that, and then distributing it out to the world. This seems on the opposite sense, almost a bottom-up in a sense, taking the smaller fiat currencies from around the world and creating specific partnerships with countries. But certainly, I mean, I worry that for Binance's sake that this project requires buy-in from so many different stakeholders at the individual, fiat currency level and government level. Do you think they're going to be able to actually achieve that? Do you think they have the wherewithal and the name recognition to actually get that project underway?
I think there's an argument that having a little less name recognition is actually a pretty valuable asset in this space. So if you're a regulator, if you're a politician somewhere around the world, and you're trying to figure out who this company approaching you with this idea for a stablecoin is, and they say it's like Libra, but it's just for you, it's just for your country or just for your region. And they're like, well, first of all, I have to figure out who the heck you are, because they don't have that negative impression that they have with Facebook. They don't have the kind of this idea of basically a global digital colonizer, which is what all of these huge platforms are ultimately in some ways. But then they look into crypto and they find out that Binance is about as big a brand as you can get in crypto, and then it has such a strong reputation. So I think in some ways where they sit in a reputational space might be interesting. I think the other thing is it strikes me that Binance is extraordinarily opportunistic, and they're almost presenting this as kind of a platform model where I wouldn't be surprised if where they build first is where they can find those best relationships, which has been their model historically, right? They didn't choose Uganda as their first fiat to crypto market because of the essential importance of Uganda to the global or even East African, markets. They chose it because there was the right combination of will and support locally, right? So I would expect to see something similar in this case.
Well, certainly it'll be an interesting one to watch to see how this project plays out. As we said, at the moment we only have scant detail, but with plenty more to come, I'm sure it'll be a project we can watch closely and could be a big game changer in the sphere. All right, so kicking us off this week for Long Read Sunday, we've got number 5 with Travis Kling's statements earlier this week talking about the narrative of Bitcoin as this safe haven currency and how that narrative didn't necessarily play out this week. What can you tell us?
Yeah, so over the last 3 weeks or so, you've seen this narrative convergence, you could say, where you have the global macro community who are looking and kind of echoing a lot of the themes that we've been talking about in the Bitcoin community for the past few months, which is this idea of Bitcoin as a potentially generational hedge against what's likely to go wrong in a future recession. And then this was really accentuated a couple weeks ago when stock markets really tanked on the news of acceleration in the trade war with China, between the U.S. and China, and Bitcoin performed really well. And so that's when you started to see the mainstream media jump in and say, is this the new safe haven narrative? And so that was kind of everywhere a couple weeks ago. Now this past week, when stocks went down, so did Bitcoin, and everything was kind of going down. And so all of a sudden, people were like, "Oh, well, I guess it was just, what about the narrative? What about the narrative?" And I think the interesting thing, and what Travis is getting at is two things. One is it's clear that to whatever extent there is a potential for Bitcoin to be a safe haven, it's not acting like that all the time, right? It's not anti-correlated or kind of negatively correlated with stocks and other parts of the economy yet. And he goes on to kind of speculate about what it might be. And whether, as this post kind of jokingly alludes to, we just have no idea what's going on with the Bitcoin price at any given time. However, there is something underlying, which is important, which he kind of mentions in his second tweet, which is this idea that the real interesting part about this narrative isn't so much whether over the next 3 weeks or 3 months even, Bitcoin always acts opposite to whatever the market does in a positive way for Bitcoin, but whether from a long-term kind of generational perspective, you're seeing a shift of people looking at Bitcoin as a digital gold, as an alternative to equities. And so I think that idea is still very much alive, and I think that the global macro community isn't going to look at a single week of performance as the indicator.
Certainly, more than a week of performance is needed. Do you think that's the issue here, that it's a matter of just historical fidelity, that we're yet to see this sort of play out into longer term where these narratives can really be built out, or do we have enough information to work with and it's just simply that there isn't the correlation?
No, I think that it's about the long term. I mean, you can certainly draw conclusions that at any given moment or at any moment in time, it's not acting in this or that type of way. However, I think that when we're talking about these real, much longer term generational narratives, it's just a time question. And I don't think we have any idea. Also, I think that this is, narratives are ultimately acts of self-fulfilling prophecy. And part of the reason that so many people are excited about this idea of Bitcoin as a safe haven asset is that every time someone suggests that and there's any evidence of it, it makes it more likely to be true.
I guess a phrase we're always told to avoid in journalism, but one I have to use now: time will tell. I guess we'll have to wait and see. All right, but now on to your number 4 for this week. And this is one, from the old ICO boom that so many had wished would die, but is still kicking on. The Veritaseum ICO of not so long ago, now still causing headaches. Why does this come back into the public sphere?
Well, I think that the big thing is, crypto moves so fast from a community standpoint and a narrative standpoint. We move through ICOs and into IEOs, and there's STOs who are floating off on the horizon. And we're talking about stable coins and DeFi and central bank digital currencies. And so we rip through acronyms in this space, right? But the rest of the world doesn't necessarily function like that. And in particular, when it comes to regulatory enforcement, we had a reminder last week that while we may be done with a lot of these ICOs, the SEC certainly isn't. So the SEC filed kind of an emergency lawsuit against Veritaseum to try to freeze the assets of the chief kind of promoter behind the project, and asking for him to be kind of banned from all future securities offerings. And so I think that the reminder is that the SEC rather is not done with its ICO enforcement actions. And as that continues, it's going to likely have impacts on how people think about tokenization and what they are and aren't willing to experiment with, and where they are and aren't going to be domiciled. And that's not necessarily a bad thing, but it is a reality. So notable, there were a few different SEC actions last week, and this was kind of the most prominent in terms of where the project fits in the public eye.
Well, it certainly is an interesting one as well, because the SEC specifically was requesting that Veritasium stop utilizing the money, stop spending the money that they'd got from their fraudulent IPO, the $8 million or so that they'd gathered from their fraudulent IPO. So, I mean, this is a case of, as much as the crypto sphere may have moved on, the money at stake is still very much real and still very much in play. Something I think as crypto and mainstream financial worlds get tied ever more is a reality we're going to have to deal with here, correct?
Yeah, absolutely. And it may be, in fact, that where it was prioritized had to do with what they thought they could, freeze or seize, right? So I think that that's a hugely important detail. And again, it's going to be interesting to watch. We still don't have clear guidance on exactly how everything plays out. However, I think that this one wasn't a particular surprise to see some sort of SEC enforcement around it for those people who were watching when it happened.
Yeah, it will be very interesting to see how the SEC handles this in the future, and how the cryptosphere handles this in terms of a reputational and developmental project. Is this something that holds people back, keeps people out, or we can all move forward from? But now let's move over to your number 3 for this week, which was an interesting question posed by Jill Carlson. The idea of what happens if someday one entity custodies all 21 million Bitcoins. Very interesting question to raise, and a thought experiment well worth having.
Yeah, so the kind of what preceded this was a question, or rather an announcement that Coinbase was acquiring Zappo's institutional custody business. So they weren't acquiring the entire company; they were just acquiring this line of business. And I think that something like 4.6% of Bitcoins will now be custodied by this combined entity. I think that's what it is. It could be wrong about that, but it's something on that order of magnitude. And so that's obviously less than all of the Bitcoins that Jill is talking about. But I think the question that she's asking in some ways is a question about what are pockets of hidden centralization or non-obvious centralization that might impact this industry, right? And so she's talking about custody, where these Bitcoins are actually housed physically, and that's one area of potential vulnerability. But I think there are others as well. You know, anytime that there's a third-party ecosystem actor that's important for the way that we use Bitcoin or the way that we function Bitcoin, it may have some impact on how the market shapes and is played out. So, you know, I don't necessarily think that it's like a warning call or a clarion call for something different just yet. But it's more like these are the types of questions that are going to be really important to ask the more that institutions get involved with crypto assets.
But do you think in terms of the questions being asked, do you think there is the regulatory framework in place, or even the self-governance of the community in place enough to ensure that we don't end up with these sort of bottlenecks that just end up mirroring the mainstream financial sector? Or is this seemingly an inevitability in the system, that as the cryptosphere grows, as more institutions get involved, we're inevitably headed towards this sort of bottlenecking as we've seen mirrored in other sectors?
There are inevitable forces that push towards centralization, I believe. That doesn't mean that they're all bad. They're just it's kind of a fact of nature, right? There's just forces like that. The question is to what extent the community adapts to them, and what are, to your exact point, both the kind of socially mandated and then potentially in the long term more governance mandated or enforceable ways that we combat the downsides of some of those potential forces for centralization. I would say that right now what we have is a whole lot of canaries in the coal mine. Right. In a lot of ways, the Bitcoin Twitter community functions largely as an early warning signal for a lot of these things. Right. I think a good example that comes to mind is Caitlin Long's writings about rehypothecation for Forbes and other publications as a potential area where it kind of de facto threatens the 21 million hard cap on Bitcoin. So you're going to see a lot more like that. And I think that's why conversations like the one Jill are having are so important to have in advance.
Certainly important to have these philosophical discussions before we get beyond the chance to have them at the individual level anymore. But I'm going to move now to our number 2 for this week and ask an important question. So Bakkt announced that its futures trading become available in September. And Nathaniel, is it significant?
Yes. So the reason I think that that some were saying, wait a second, why is this so big, is because the way that people were talking about it was with such elevated terms, right? You had people who were, credible voices who were saying this is the biggest news of the year or longer, right? That this was actually coming, which was the same thing that people said when Bakkt was announced. And there were a whole bunch of reasons that they listed and they came back to it. They came back to it again. One is the pedigree of the institutions involved, right? This is obviously the same owner of the New York Stock Exchange. Another is this idea of what futures do for price discovery and for market legitimacy by giving you a way to interact with the asset in a much stronger way. You get to a more real price that is importantly more trusted by actors who are maybe skeptical, right? So one of the big questions for the Bitcoin ETF is whether there's kind of sufficient market information for pricing it, and potentially this helps. But then there's the big piece that I think a lot of people were pointing to as well was the idea that these were physically settled. So, the difference here is that if you have a cash settled futures product or derivative product, it just means that whatever the outcome is, it's settled up with either a debit or a credit that's payable in USD or cash. So you don't ever actually have to own or hold the underlying asset. It's just kind of almost like a betting on the price, and whereas with a physically settled futures product, settlement actually involves handing over the Bitcoins in this case involved, which obviously means that someone has to buy the Bitcoins, which means that there's a much higher powerful signal on for the market on price. So that's what people are really, I think, most excited about in terms of how this is different from something like the other futures products we've seen, is the fact that it's physically settled. So all combined, you have something that creates potential more market pressure directly in the form of actually having to hold and custody these assets that are under question, and then also just the legitimacy of the player. And the number of these institutional actors who might be kind of just sitting on the sidelines or hovering around the sidelines waiting to get in for something like this. So all in all, I do think it's a huge deal, especially to the extent that you believe that institutionalization is an important next step for Bitcoin as an asset.
And certainly even looking just in the short term and the present impact on the market since that announcement was made, we've seen Bitcoin up around $1,000 or so since then. I mean, do you think you're going to see the impact of this as we approach September being ever more weighted on the market? Do you think it can be that level of significant in the short term, or are you looking to a longer term game when it comes to the impacts we're going to see with this Bakkt announcement?
I'm more interested in the longer term, just because we've seen, so the Bakkt announcement originally, we had a chance to kind of price in that signal, and this is an announcement that maybe had some positive impacts, but really this is one where the potential impact on price in the markets long term is not just from a narrative perspective, which is unusual for us here in the Bitcoin world. We're used to mostly mimetic forces in the markets. This is one that there's actual real potential demand increase. So I would anticipate the real impact of this will be a bit longer term, and I'm not exactly sure when it starts. I think to some extent it has to do with how fast they push once they actually launch. But it's certainly a positive, I think, for the medium and long term.
Certainly, yeah. September could be a very interesting month when it comes to the cryptosphere. We'll all have to continue watching closely. And that leads us now to our number 1 for this week. An interesting one, a story that I wouldn't say made global headlines, but one certainly with significance, talking about Electric Capital and their developer activity report. What's the significance you put to this, Nathaniel?
Yeah, so sometimes with this list, the countdown is largely predicated on what's the biggest news or most important news of the week. Frankly, last week was a classic kind of August week where lots of interesting things. The Bakkt announcement was big, but ultimately it's kind of a mid-range week. I mean, I think that this Binance news, for example, is as big as anything we saw last week. However, I also like to really focus on where people are doing great, insightful work or research that can help us understand this industry better. And so Electric Capital is a venture firm. This is their second dev ecosystem report. And basically they dig into GitHub in terms of all of these kind of open repositories, and they look to see which projects have the most activity, how many developers are contributing overall, and just what the trend lines are. And this is a really important signal because, you know, we're used to seeing the data around price, obviously, but in some ways that functions almost irrespective, at least in the short term, of what's actually being built and sort of fundamentals. And so this dev report is almost the exact opposite of that, which is not really subject to price, just seeing what devs are doing. So for example, they kind of showed that year over year, basically, the amount of kind of commits was pretty flat, right? It didn't matter that it was a really bad market. You saw something similar. Now they saw also that the total number of developers contributing kind of across projects had gone down slightly. But what they found was that that was actually that dip was almost entirely attributable to part-time developers, a reduction in part-time developer contributes. So those developers who made, you know, one contribution per month or less, and at the same time, full-time developers actually went up. So this may square with the idea that there's kind of the interest that remained during the bear market was more dedicated, more passionate. So there's a lot of interesting things in here, but I think that the overall signal is that contributions to this space, developer interest remains consistent kind of regardless of price. Now, we haven't seen this sort of developer report for what happens when the market really gets going again and how people come in. And I also think it's important to note that this dev report is focused on specifically contributions to the actual protocol layer. So this doesn't necessarily take into account how many developers are now working on ecosystem projects that maybe aren't open source or aren't contributed, right? There's entire large kind of closed source financial or different types of products that sit on top of these protocols that may also have efforts. So overall, I think it's a really positive signal, you know, kind of a lagging indicator of how things are going in the space, and something that's important that we keep an eye on so that we're not just entirely focused always on what short-term price action suggests about the health of the industry.
Certainly a very important thing to note, some of those key numbers. I'm always agreeing and saying data is king. We need to make sure we're seeing what's happening in this sphere. People love to speculate, but it's important to get the real numbers out on the table. Reports like this do just that. And I want to thank you, Nathaniel Whitmore, for drawing and highlighting this important information and much like it. Thank you so much for Long Read Sunday this week. I look forward to next week when I'm sure, as we've started off this Monday with a lot to talk about, there'll be plenty to discuss come next week. So Nathaniel Whitmore, again, thanks for joining us on Block TV, and stay with us at blocktv.com for all the latest in news and information. I'm Asher Westrop Evans. Thanks for watching.
For more news and updates, follow us on Twitter.